Hey folks, Dan Frio here with your opening bell for April 24th, 2025. So strap in your seatbelts this morning because it's going to be another rocky ride. So what we're going to talk about today is there were some durable goods orders that just came in, blew away the numbers. We had the unemployment numbers come in right on point. So the markets right now are poised pretty well. But what I want to explain to you guys is what's happening these things right here. Because if you're watching this channel, most likely you're looking to build, buy, or refinance, and you're just trying to get direction on where mortgage rates are going and also mortgage programs. So that's my goal for today. So my name is Dan Frio. I do this report 2 times a day. I'm a nationwide mortgage loan officer licensed in all 50 states, as well as Puerto Rico. Our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do that? I'll give you all that information at the end of this video. So without further ado, let's get to today's news. So here's what we're seeing right through here. Mortgage rates eased a little bit yesterday. They were much better than this at the beginning of the day, and they deteriorated throughout the day. Is that going to happen today? Well, be prepared. So if you're looking to build, buy, or refinance, it's really challenging right now because rates change. I mean, the other day, rates changed 0.1% in one day. So how do you prepare yourself and get ready for another drop? Okay, so that's what we're hoping to find out today. But what we want to talk about today is the economic calendar and how that's going to affect these things today. So let's get over to it. The headlines that we have in the news right now is China saying they're not talking to the U.S., which is a head scratcher, but the markets aren't really reacting or overreacting to that. You see the equity markets right across here. They're just basically stagnant. We have oil up 1% at 62. That's not going to do anything really with oil prices. We love when this is under $70 a barrel. It helps inflation numbers. Then we have the 10-year Treasury, the bonds, they're actually down as well. We go over to the MBS market, and this is what we follow on a daily basis because if you're trying to follow mortgage rates, this is what you follow. You don't follow the 10-year Treasury, you follow the mortgage bond, okay? Because if you follow the 10-year Treasury, the disconnect, if you talk to somebody years ago, they would say, follow the 10-year Treasury and then add like 1.5% to that rate, and that's what your mortgage rates are. It doesn't work that way anymore. There's a bigger risk spread than normal, and that's why mortgage rates are higher than the normal where it's going to be. So right now, we got the MBS's up 31 ticks. What does that mean? All you have to understand with this is if the bond price that you're seeing right here, if the price goes up, rates are coming down. So we love when this number goes up. Yesterday, the market opened up 60 and ended up only a couple points. So we want this rally to continue because we want those prices to go up and the yields to come down. The news that we had today, there was 2 pieces of breaking news. It was durable goods orders and also some, right through here, initial jobless claims. So let's get over to Rick Santelli at the Chicago Mercantile Exchange to give us the breaking news for today because this will set the tone of what happens the rest of the day. So Rick, buddy, take it away.
Welcome back to Squawk on the Street. Rick Santelli here live at CME HQ with the breaking news on this Thursday morning. Initial jobless claims expected to be 222,000, coming in exactly as expected, 222,000, which means it is up 6,000 from a slightly revised 216,000. Continuing claims for the week ending April 12th, 1,841,000. That's about 20,000 lighter than expectations. Sequentially lower than the 1,878,000 in the rearview mirror. And
so what that gives us is it's saying not as many people are getting let go. Well, 222,000. And I never seen this come right on point. It's kind of odd. But it was 6,000 less. So we're not having that huge job deterioration that a lot of people are expecting. I don't know. I don't know what's going to happen with it. I'm completely blunt with you guys. This is why we follow it daily. Everybody that gives their forecast, they got a bit of a 50-50 chance of being right or wrong. So that's why I provide you the actual truth of what I'm thinking. That's why I provide this every day to help you guys or guide you guys through this process.
And 1841, how does that compare? Well, that would be the smallest amount since May of 24. So that really is rather interesting that we go back that far with regard to continuing claims. It really shows more than anything that both these variables, especially initial claims, are very well behaved. Our preliminary look at March durable goods coming in extremely strong, 9.2%. 9.2%. That would be the best since July of 24. You remember that month? That was 9.8%. Very healthy. But strip out transportation, and it all disappears. 0. Goose egg, we're expecting up 3/4%. Unchanged, 0. And 0, well, how does that comp? Minus 1.4 in Jan of 22 would be our comp on that. So it really does go back a ways. Now let's consider if we look at capital good orders, non-defense X aircraft, that comes in 1/10, up 0.1% as expected. And if we switch from orders to shipments, up 0.3, that's better than expected. And that follows that very robust up 0.8, that gets downgraded to up 0.7. All things considered, we see transportation had a huge impact on durable goods. The number really isn't moving the markets much. We're hovering at 382 in a 2-year, and that would be down 5. We're looking at 434 on a 10-year. That's also down 5. We have the last of $183 billion in coupon supply from the U.S. Treasury coming in at 1 p.m. Eastern today in the form of $44 billion 7-year notes. The 5-year auction yesterday wasn't terrific, but it was pretty darn good, all things considered. It was the previous auction, the shorter maturity in the form of a 2-year, that was a little bit on the iffy side. We want to continue to monitor the yield curve. It really is significantly steeper over the last 4 months, but it's come down rather dramatically from the 65 level that we had just 3 days ago. Andrew, back to you.
So that's what we're seeing right now is that was basically all good news, other than the durable goods orders when they strip out autos. But I think people front loaded a lot of those autos. So basically this should just calm the markets. It should be everything isn't so bad or as bad as everybody anticipated. So what he's talking about is trending your treasuries and the yields and everything changing around. So you can see the MBSs are still up 28 points. Okay, so there is one thing I want to go over with you guys real quick before you, and please don't turn the dial, before you apply for a loan, for a car or a mortgage. Okay, before you do this, anybody, I don't care if you're going to use me or not, please do this thing. I've been trying to push this for the last couple months, and a lot of people do it. Some people don't. I had another person call me yesterday, and he said, Dan, after you pulled my credit, I've gotten 30 or 40 calls, and it just keeps continuing. So what happens is these are called trigger leads. Okay, so when a bank pulls your credit, if you're looking for a mortgage or a car, what they're going to do is the credit agencies are going to sell your data, and they'll sell it to anybody, basically. So if you want to stop that, the credit agencies actually created this. You have to fill out the form to stop your financial data from being sold. So if you want to take advantage of this, just go to optoutprescreener.com. I have it down below in the description as well. Just sign up for this thing and it'll stop all your data from being sold. So that's that part of the equation. So let's go back to the calendar for what we got. There's really nothing coming in tomorrow. So this is basically the news that we have for today. So as long as the China trade goes okay, or they settle on this is basically the headlines right now. So we have jobs report came in. It was okay. We have GDP come in, or the durable goods orders. It was good, but you take out food, the cars and autos, it's flat. So the market's not as bad as a lot of people are insinuating. A lot of earnings are coming out as well this week, and we'll recap those maybe tomorrow in tomorrow's video to see how this week's earnings on corporations came out. And then we're also going to check the yield curve. He was talking about the yield curve previously, and that's the debate that President Trump has with the Federal Reserve. He's saying, well, we're working hard to bring down the national debt, and bringing down the national debt's also going to bring down the 10-year Treasury and all the Treasury yields. But the Federal Reserve, they really don't control directly, but they have an indirect control over the front end or the short-term rates. Well, they're keeping rates so high because of tariffs, and I agree with it. But once these tariffs get situated, or at least the dust settles, I think the Federal Reserve will have the opportunity to drive down the short-term rates that'll revert the yield curve, and then it'll hopefully help the economy and help basically everything in general. Because when you have an inverted yield curve, it's just bad news. And I'll go into that in another session. But check it out. Google inverted yield curve, and you can see why that's bad for the economy. So that's what we're hoping to get out of. We mentioned that yesterday in yesterday's video. So that's basically what we're seeing in today's market. So if you need some help, like I said, if you need some help, even looking to build, buy, or refinance, hopefully I can be your person. Okay, again, I'm licensed in all 50 states as well as Puerto Rico. I've been doing this for over 35 years. The unique thing that we have here is I work at a federal bank. That makes me licensed all over the country. The unique thing is the reason why I joined this bank is I'm helping them grow. Right now, we have 33 other lenders that we can use. well, you can use. So let's say you put in your application right through here. That's all you have to do. You don't have to call this bank and that bank and this bank and get multiple quotes. I'll do it all for you. So one application, we're going to put in your application, pull your credit, and then we are going to shop you with my bank and the other 33 lenders that we work with to see, do they have a program that might be better than what I have? Do they have lower rates than I have? So we'll be able to utilize those. So that's how it works. So you want to reach out to me and figure it out and see how it truly works for you? Well, go to therateupdate.com. Right over my head, you can put in your application. Right over there, you can schedule a consultation with me or Alan. Over here is our 800 number. It's 844-775-5626. Or we have a lot of videos down here for those out there that are looking to either buy a house. This is a first-time home buyer, a guide. Disabled veterans. If you're a disabled veteran, please check out the programs that we have here for you. But if you're a homeowner right now and you're wanting me to watch your rate to see, let's say you're at 7.5 and you're like, Dan, when it hits 6.5, please reach out to me. I'd love to refinance. Go to the RateWatch tool right here. You're going to click it. It'll show you a video and then it'll give you a form to fill out. Here's what I truly do with this thing. And I'll be completely honest with you. I put it in an Excel spreadsheet. I don't want it stolen. I'm not selling it. I'm not doing anything. I'm personally using it. So every day I sort through it. And if your number and name comes up on there because we hit that trigger mark of where your interest rate's going to be or where you want it to be, I'll be giving you a phone call, a text, and an email. And it'll be coming from me, yours truly. So yes, I will be tracking you if you put your information in here. But if you want to learn more about buying, refinancing, or maybe looking to build that house, well, please reach out to us. We'd love to help you. So that's it for today, folks. I'll be back at the closing bell to let you know how this mess ends for the day. Thanks for watching, folks. God bless. Have a fantastic afternoon. See you later. Bye-bye.